It's time for business now with Charles Pellegrin. Hi, Charles.
Hi, Gareth.
You're starting with a look at the oil prices and stock markets. That's after a change in direction on the back of Trump comments on the war in Iran.
Oil prices are sliding down and shares are moving back up as Donald Trump has signaled that a possible end to Operation Epic Fury could be in sight and that military objectives were, quote, pretty well complete. Let's look at oil prices first. Both global benchmarks, the North Sea Brent crude and the West Texas Intermediate, have slid from their highs we saw on Monday, at one point reaching around $120 a barrel. Today, significantly lower, as you can see there. This has translated into a bit of a rally when it comes to equities in Asia. Both the Kospi in Seoul and the Nikkei in Japan finished the session higher, over 5%. South Korea nearly 3% in Japan. And we saw a similar trend at the open in Europe. You can see the DAX in Frankfurt up over just around 2%. The Paris CAC 40 up over 1.8%. This market analyst summarized the mood this Tuesday quite well.
And today is the rebound, obviously positive comments from President Trump overnight. We're starting to see the light at the end of the tunnel for the war. And so now we're probably going to go in through a period of risk on again. So volatility is going to remain with us, but things are certainly looking a lot brighter today.
Charles, the losses incurred since the start of hostilities in the Middle East have far from recovered, though.
And as that analyst mentioned, volatility is the key word. It remains. Donald Trump might have talked about the war reaching some form of a conclusion, but he also made other statements that temper those previous statements, notably saying that, quote, we've already won in many ways, but we haven't won enough. And in the meantime, well, the crux of the matter, the Hormuz Strait is still virtually closed to all tanker traffic, choking off supplies of oil, gas, and other commodities too, like fertilizer. So Saudi Aramco's CEO this Tuesday called this, quote, the biggest crisis the region's oil and gas industry has faced, warning of catastrophic consequences for oil markets the longer this disruption continues. The U.S. president has promised to intensify strikes on Iran if it further disrupts oil supplies, and has talked about having the U.S. Navy escort ships through the strait, but without providing more details.
So is the Trump administration considering other options to curb oil prices?
Reporting in U.S. media shows that a number of different options are on the table, especially with prices at the pump on the rise in the U.S. ahead of a key midterm elections. These options include releasing oil from the country's emergency stockpiles to stabilize the market by increasing supply, or temporarily stopping collection of the federal gas tax, which would require congressional approval. Other options, getting the Treasury Department to wade into the oil futures market and try and influence its direction. And finally, there's been talk of waiving oil-related sanctions. Trump acknowledged discussing this with Russian President Vladimir Putin over the phone. Russian oil is currently the target of a price cap on global markets, and the two major oil-producing companies there are on the U.S. sanctions list. We had a taste of this actually last week when India was allowed to purchase Russian oil once again. All of these are just options at the moment, but it really shows that the Trump administration is feeling mounting economic and political pressure from this military campaign in Iran.
All right, well, moving on to some other news. Venezuela's parliament has given preliminary approval to a draft bill that would open the country's mining sector to foreign and private investment.
Monday's vote follows a visit to the country by U.S. Interior Secretary Doug Burgum, the second cabinet-level Trump administration official to visit Venezuela since the U.S. military captured and deposed President Nicolas Maduro. The U.S. is seeking to reopen Venezuela's vast mineral resources to foreign and private investment after much of the sector was nationalized by Maduro's predecessor, Hugo Chavez. But challenges abound. Brian Quinn explains.
The beginning of a new era for Venezuelan mining, as lawmakers on Monday advanced a bill that would open the sector to increased foreign private investment.
One of Venezuela's most important potentials is its mineral wealth. The fact requires regulation based on technical criteria and a structure that corresponds to our new needs.
Venezuela has significant mineral deposits, including gold and diamonds, bauxite for making aluminum, and coltan used in electronics manufacturing. The U.S. has been pushing hard for Caracas to reopen its mining sector as it seeks to counter China's mineral dominance amid an ongoing trade conflict.
So they're rich, rich, rich in minerals. And just like they passed an amazing hydrocarbon law back in January, in 3 weeks their legislature did that. In response to the U.S. That's creating opportunities for investment, for human capital and financial capital in their country haven't seen.
Much of Venezuela's heavy industry, including its mining sector, was nationalized decades ago under hardline left-wing President Hugo Chavez. The U.S. capture of his successor, Nicolás Maduro, in a dramatic military operation this past January, though, has ushered in a government far more pliant to U.S. demands. But analysts warn that, as with the country's dilapidated oil infrastructure, massive investment will be required to revive Venezuela's mining industry. Endemic corruption, illegal mining controlled by armed groups, and the potential for environmental disaster in fragile jungle ecosystems will also be hurdles, as Washington seeks to remake the economy of what was once Latin America's wealthiest country.
All right, Charles Pellegrin, thank you very much for that business update.